Small cap companies or private companies? What's the difference in investing in those? In the comments in one of my previous videos, or a couple of previous videos, there was someone who put a comment, and actually it was a valid comment to a certain extent. In one of my videos, I said that it's better to invest in private companies as you can get more of a return on your investment. And in the comments, they said you can get a similar good return, similar to private companies in small cap public companies. Now, when it comes down to capital appreciation, I think he's correct. So, for example, let's say that company is worth £80 million on the market, and you're able to pick that up for maybe the price of equivalent of £20 million. Then, of course, when the stock corrects itself and it goes back to £80 million, you can go and sell that stock, and you've made yourself your arbitrage margin on that. So without a doubt, you've made a good profit on there. But my point is that with private companies, you can make a good capital appreciation on your investment if you can purchase it as at a discount of intrinsic value. The £10 million market value company, you will be able to pick up more dividends through that private company than you can in the public company, generally speaking, as long as there's no change in the profitability of that private company. Because when you're the owner of that company, you're 100% owner, or even if you're the 80% owner of that company, you can call on 100% or 80% of the profits of that company. Now, of course, you don't want to drain the company of cash, because there needs to be cash in the business for reinvestment, especially if you're able to grow the business with capital deployment. Then you can maybe take 80%, 70%, 60%, 50%. You're the owner. The choice is yours. But one thing I can guarantee is that in 80 to 90% of the cases, you'll be able to collect more cash on a yearly basis of ownership from a private company than the dividends that any public stock, even if it's a small cap stock that you purchase less than intrinsic value or a discount to intrinsic value, they will pay you a smaller dividend than the private company. Now, of course, that private company, you collect those dividends over time. And let's say, for example, you're able to pay off your cash investment that you've made to purchase that business in 3, 4, 5, 6, 7 years. And then you go and sell that company for, even if it's one more multiple than what you paid for it, then not only have you recovered all of your money, but you have also sold it at a profit. Now, if you go out and be smart about it and sell it to a trade buyer, someone who's a very, very big company in that industry, or you sell it to private equity, you can easily achieve 6, 7, or even 8 times multiple. Indeed, I was listening to a seller who is not a seller, actually. He decided not to sell his company. His company is a plumbing company, which is making 2 million, it's an American company, $2 million in profit per year. And a private equity company offered him $20 million to purchase him out, 100% of course purchase. Now, he didn't end up selling it because he thought, you know what, I only work in the business. He works in the business a total of like 5 hours in the year. He's got full management team, everything there, and they're growing the business for him. He works on just making acquisitions, and he decided not to sell it because he thought, I'm just going to grow the business anyway, and I'll be able to make that kind of money in about 3 or 4 years' time. Not the choice I would have made. I would have sold the company and then redeployed that capital elsewhere. But of course, that's his choice. He wants to do what he wants. But the point is that that private equity company offered him 10 times multiple for his company, 10 times the multiple. So if you sell it to the right people, private companies will make you more money in general over public companies. Now, public companies are preferred. Why? Because the market is liquid. And not only is the market liquid, of course, they have all of the rules that they have to follow. Generally speaking, there is less chance of fraud, and there is less, it seemed to be less risk, but actually it's not, it's the same risk. But it appears to be less risk when you're buying these public traded companies because of all of the regulations that they have to follow. But if you're going to small cap companies, then of course small cap companies can have been known to, swindle the numbers and maybe not tell the whole truth, unless if you go to, one of the Dow Jones companies, or if you go to the FTSE 100 companies, they're different because they're so big companies. They want to do good reporting for the people who want to buy the stocks. My view, again, private companies, you'll be able to make a better return. And for me, I mentioned this many times as well, I like to collect the dividends as we go along. And not only that, alhamdulillah, may Allah keep it this way. I've always been able to find private companies for a very, very good price. I've not paid more than 3 times multiple for a business. In fact, I've not paid more than 2.5 times multiple for a business. But my next deal, inshallah, I'm going to pay 3 times multiple for the business because the deal structure is very good. My general rule is that unless it's a very, very high quality company, I don't want to pay more than 3 times multiple for a company. However, if the structure is very good and it's a high quality business, then I have no problems paying a little bit more because, of course, of those added benefits on the deal side of things. High quality companies are always good to own because you know that you've got fantastic management teams, and not only that, they can pay dividends over time to you on a monthly, quarterly basis whenever you want to draw down of those dividends. And remember, you're the owner, so you can choose to have monthly dividends if you want it. You can choose to have quarterly dividends if you want it. You could choose to have no dividends at all, and then once in a year, you think, okay, I'm going to declare this kind of dividend. Remember, you're the owner. You can do whatever you want to a certain extent without bleeding the company to death. So my response, yes, you can make good gains on small cap companies through public stocks. However, private companies are my preferred way to go. And inshallah, we'll be releasing the fund in a few years, Sharia compliant private equity for everyone starting off in the UK. But make dua that we spread across the Western world at the very least, because this is the opportunity. So many companies available for sale, not enough buyers who can buy them and run them properly. And not only that, we should benefit from them. Our community should benefit from them, and anyone who's an ethical investor, inshallah, should be able to see that. Anyway, I hope that answers your question, and I'll see you in the next video.